Well, guys, Lululemon has plummeted big time after hour. Well, during the day, actually. And this is what's interesting. I want to go over this very importantly. Here's what it is. Lululemon shares plunged 20% after the company gave a much worse than expected full year outlook. Now you hear that, and you wonder yourself, well, how big of an outlook was that? Well, guys, let's look right here. Lululemon said it expects full fiscal year earnings of $12.77 to $12.97 per share, well below the estimates of $14.45. Okay. It also anticipates full year revenue of 10.85 to 11 billion versus 11.18. These are not huge misses. This goes to show that the market's going to overreact. Let's add some more in here. I want to show you guys let's pull up Lululemon in our software and look at this, guys. All-time high, 516 on December 29th, 2023. Less than 2 years ago. 52-week high earlier this year of 423. It's currently at 167. This is where you start paying attention. Let's look at the numbers here. Let's see what analysts are saying. Now, this is what's big on Lulu. If Lulu can be a company that is just having a temporary problem and it's not a fad and it's going to keep growing into a major brand, you've got to pay attention to this company. Analysts think that this upcoming year it'll make $14.78 per share, increasing to $24. Who knows if they're right? They've missed a lot. Look at how they missed on Amazon for years, on Tesla for years. Revenue, 50% increase over the next 4 or 5 years. That is something to pay attention to. But more importantly, we've got to look at this company. This is an 8-pillar company right now. It's selling for a 5-year PE of 16.7 and a 5-year price of free cash flow of 20. In the last year, it has a 15 PE and 15 price of free cash flow, 11 PE. So this company has net income significantly higher than its free cash flow, something to watch for. But look at this return on invested capital. This company does a great job of getting returns on the money invested in their business. The big question to me on Lulu is it here to stay? But at some point, if it gets cheap enough, somebody's probably going to buy them. But are they here to stay? They have very high gross margin, 60%. They have a good profit margin on 15%. Are they here to stay? Is it a fad? Is it like Under Armour, where they came, hit it big, hit it hard, and then started to fly? Who knows? Very low debt. Very, very low debt. That's pretty hard to do for a brand like this. Let's go to our stock analyzer tool, because this is what really matters. Let's look at the history of our stock analyzer tool. Here's the analysis I did on Stock Analyzer. Here are the assumptions I made. 10-year analysis. I did 4, 7, and 10% revenue growth for the next 10 years. Profit margin, I kept it at 14, 15, and 16. Free cash flow, I did it 1% below. PE, 16, 20, and 24. Guys, let's be conservative. Let's call it 14, 17, and 20. 17 and 20. And my 9% market return. What's this company worth to us today? That's the question. I hit the analyze button. Remember, this has no margin of safety in here. The stock's currently at 167. This is why you've got to pay attention. This is why you need to pay attention. The real question is, if I woke up 20 years from now, is Lulu still around? Is it a bigger company? If it is, if you believe it's going to be around for 20, 30, 40 years, and you think it's going to continue to grow at a reasonable rate, this could be a huge opportunity for Lulu. This is what we have to pay attention to. We're talking about 16% returns on my middle assumptions. I don't know if I'm right, but 7% growth is doubling your revenue every 10 years. All right, let's go conservative. Let's call it 3, 5, and 7% revenue growth. Analyze button. This is pretty interesting, guys. This is pretty freaking interesting. Let's say you're like, listen, I'm going to wait for 17.5% returns, which is insane. We're getting pretty close to there. 135 to 145. Basically, the 150 mark is these huge 17.5% returns. That's the power, one, of our stock analyzer tool, because it allows you to sit there and make all your assumptions, what your desired return are, and go from there. But two, it's what's so important about why we create our community. We sat there and said, listen, we need a place where people can sit there and talk about these kind of opportunities. Is this going to be like a meta opportunity? I don't know. But women love Lululemon. But there's another brand out there called ALO, that's making a lot of headway. I was at the airport today and I saw a guy, the president of the Cleveland Cavaliers, is on my flight. I didn't say anything, but he was wearing ALO brand. Mo on the channel loves Aloe brand. I don't even know how to pronounce it. But Lulu's still very, very popular. The question is Lulu going to grow? Is this a sign of the times, or is this just a opportunity for people to own the stock? That's the question we have to ask ourselves. If you want the stock analyzer, if you want everything else, check it out. We want very serious investors who are trying to learn how to fish, not who want fish, not to be given fish. Go check out everythingmoney.com. There's a 7-day trial. It's absolutely awesome. There's a reason why 83% of people who do our trials sign up for the year. Thank you for your time.